Daily Live Forex Market Outlook by Trader Plato. Introduction. The purpose of the market outlook is for us all to have an elite mastery of the forex market to an advanced level. The forex market is a decentralized market that runs 24/7 from Mondays to Fridays. It has a market capitalization of approximately $8 trillion daily. Dominant and non-dominant market participants. At the top and in the middle of the hierarchy, we have the dominant market participants. That is the central banks and the large financial institutions. At the bottom, we have the non-dominant market participants. Those are the retail traders. In a nutshell, the dominant market participants make up of 95% of the market participants, while the remaining 5% are the non-dominant market participants. Those are the retail traders. This is according to research and data from the Bank of International Settlement, the Bank for Central Banks. Market mechanics is a unique hybrid trading strategy that utilizes technical and fundamental constants to generate accurate trading signals. Power of 3, AMD chronological order. On Fridays, we have the accumulation phase. On Mondays, we have the manipulation phase. On Tuesdays, Wednesdays, and Thursdays, we have the distribution phase. Therefore, we do not trade on Fridays and Mondays, as these are the accumulation and manipulation phase of the market. Power of 3, AMD chronological order. The Asian session is the accumulation phase, the London session is the manipulation phase, and the New York session is the distribution phase. So we do not trade the Asian session, as this is the accumulation phase, but we are allowed to trade the London session since it sometimes overlaps with the New York session. Power of 3, candlestick pattern order. Unique candlestick reveal mass psychology that symbolizes the power of 3, the accumulation, manipulation, and distribution. Below are the images of the candlestick showcasing the mass psychology and movement of the market. We have the bullish and the bearish candlestick patterns. Liquidity and trap zones. All the market concerns about is liquidity and nothing else. Liquidity is basically points in the chart where majority of orders are pending to be filled. Thus, liquidity is the energy of the market. Without liquidity, the market will not move. These zones are as follows: yearly high and low, monthly high and low, weekly high and low, daily high and low, swing high and low. Welcome to the chart. New day, new target. That is how the market maker moves. For the sake of those who are new, let us take less than a minute to explain candlestick patterns. As you can see, price rallying up, creating series of higher highs, lower highs, and higher highs with a cluster of green candles. Let us mark the green candles in a red box. These green candles, they signify buying pressure, while on the other hand, as you can see, price consolidating around this range with a cluster of white candles. Let's just mark them in a box. These white candles, they signify selling pressure. Meanwhile, a candle that is neither green nor white, that has no color, like this candle right here, signifies indecision in the market. So those are the three things that price says at all times. However, the market is not as easy as that. Just because you see a cluster of green candles doesn't mean you should buy. Likewise, just because you see a cluster of sell candle does not mean you should sell. Nevertheless, they give us an insight into the direction of the pressure. Either we are having buying pressure or selling pressure. Now let us get straight to business. On the daily market outlook, we look out for liquidity and trap zones. As we know in the market mechanics, these zones offer the best opportunities in price. They offer the best zones to have the highest risk to reward on a trade, as well as the minimal risk per trade. Now, we must know that these zones are support and resistance zones, as they are the zones where we have the strongest buyers as well as the strongest sellers. So now let us keep a concept in mind, that the market buys to sell and the market sells to buy. Why does the market do this? The market does this because forex trading is a zero-sum game, and for some to make money, some must lose money. So every loss a trader makes is the gain of another trader, and every profit a trader makes is the loss of another trader. So let us get straight to it. Right here, we only look out for the strongest zones in the chart, and in the middle of this box we have the Asian session, which is the opening session of the day, which is the first trading session of the day. And why we look out for this session is because this session is debate, and this session offers an insight into the direction of the rest of the day. So right here on USD JPY, we can see price creating buying pressure in this zone, and the buyers still take control and push price higher. And right here, as you can see this buy candle here, we are expecting what? We are expecting a buy to sell, as this is likely a buy side liquidity for a sell, and for that to occur, some things need to be in place, which means that for us to have a buy side liquidity to sell that is valid, just for instance as we had here yesterday, which was valid before price dropped, and we predicted this yesterday. So right here we are going to expect what? We are going to expect some beautiful things around this area. We expect the eye of the Asian session to be taken out, liquidity should be grabbed to induce more buyers, and price should drop with one or two candles. Price must drop, break this low, and then we can conclude that the US dollar will weaken against the Japanese yen further down. On AUD JPY, we can see at the Asian session, we can see the buyers creating pressure, and right here we see the sellers. However, we make no conclusion on this pair, but just because you are seeing this buy candle with a lot of buying pressure, it doesn't mean you should buy. Right here we have a weak support, and there are criteria that qualify this as a weak support, and however, exclusively we teach this in the mentorship, and we are going to be releasing a video on this. So this is a weak support, so we expect this support to be broken later in the day. On Euro USD at the opening, what do we see here? At the opening of the Asian session, we can see the sellers creating pressure, and right here we see the buyers. So for this pair we make no conclusion, as we do not have sellers directly at the support area, and we do not have buyers at the resistance. So we make no conclusion on this pair. On USD CHF, you can see a strong buy candle opening the Asian session with buyers pushing pressure of breaking the high of yesterday, and here we can see sell candle around this resistance. Following from this, however, right here you can see an accumulation of buy orders, a buy side liquidity. We can see sellers inducing more buyers to take position, and right here this candle forming, we expect this candle to break the low of the day and ride further down with just this single candle. If that happens, then we can conclude that the US dollar will weaken against the Swiss franc further down. However, this is a weak support and we expect it to be broken. On AUD USD, at the opening of the Asian session, what do we see here? We can see the buyers in this zone, and we can see the sellers in this zone. However, for us to have a sell side liquidity for a buy, we need the low of the day to be taken out to induce more sellers, and one or two candles needs to break the high of the day and ride the trend further up. Then we can conclude that the Aussie will strengthen against the US dollar. However, yesterday as predicted, we predicted a buy on AUD USD, but this zone was broken, and however, nevertheless, price still pushed further up. On GBP USD, as predicted yesterday, the zone held and price pushed further up. However, this morning we can see the sellers consolidating around this range to fill this fair value gap, because there are a lot of orders sitting down here, and right here you can see sellers in this zone, and since the sellers are not directly at the support, we make no conclusion on this pair. So right here we look at our strongest zones, we know what to ignore and we know the pairs to give attention to. On NZD USD, we have the buyers in this zone, I have the sellers in this zone pushing price down. This is a buy side liquidity for a sell which has occurred. However, we need stronger pressure from the sellers to push price further down and break the low of yesterday. Then we can conclude that the New Zealand dollar will weaken against the US dollar. Right here we look for directional bias for the day, new targets. The market maker does not care about what happened yesterday, he cares more about the orders of today and how to manipulate those orders to his own advantage. And those are the same things that we look out for right here. Right here on USD card, you can see the buyers in this zone attempting to push price up, and we have the buyers directly at this resistance. So we expect a buy side liquidity for a sell if the sellers are going to switch pressure. However, they need to break this resistance further up to induce more buyers to take position and for price to go against them with one or two candles that close as bearish candles, and it needs to close down below the structure, later close down breaking the low of the day and riding the trend further down. Then we can conclude that the US dollar will weaken against the Canadian dollar. On Euro JPY, at the opening of the Asian session, we can see the buyers in this zone pushing price up, buyers in this zone. However, we can expect a buy side liquidity for a sell, and for that to occur, this structure has to be broken, this low has to be broken, and price has to ride further down. On gold, at the opening of the Asian session, we can see strong sellers in this zone pushing price down. Right here we see buyers. Following from this, we make no conclusion on this pair as we do not expect buyers directly at the support. On GBP USD, not seeing buyers directly at the resistance, we make no conclusion on this pair. However, seeing this strong buy candle, it doesn't mean you should buy. This is a weak support and it is likely going to be broken later during the day. On gold, right here we can see, on silver, right here we can see the sellers in this zone and the sellers pushing price further down. However, this is a weak resistance and we can expect it to be broken later in the day. Nevertheless, we expect a sell side liquidity for a buy, so we expect this low to be raided to induce more sellers and price to go against them with a bullish candle, one or two, breaking this structure. Then we can conclude that silver will ride further up. USDCNH, if you have been following us for a while, do this analysis on your own. On BTC USD, we make no conclusion on this pair as we have sellers directly at the resistance, and you just seeing buyers in this zone pushing price up, it doesn't mean you should buy in any of these zones, as these zones do not fulfill the criteria to put in strong buy orders. However, we have a fair value gap here which price is likely going to retrace to fill out these orders. On DXY, we make no conclusion on this pair as we don't have sellers directly at resistance, and right here we have buyers, so we ignore this as well. Plan your trade, trade your plan, and most importantly, manage your risk and emotions.